Good morning. Good morning, everybody. How's it going? It is Friday. Friday. Morning, Chris. Greasy. Good afternoon in the UK. Glad you can join us. Morning, Tyler, Benton, Rich. See if we can have a good ending to the week here. Good morning, Steve. Oh, crap. 1 second. Not logged in here. There we go. Now I'm logged in. All right. Well, maybe that's what happened to me because I could have swore I was logged in. All right, so I'm looking for price to run up this buy side liquidity, but actually, I'm still looking for it to go long. We have 9:45 news as well. Whoo, look at that. Here we go. Finally, we're in those 800s that I kept talking about. In this about to hit the middle of the new week opening gap. Here's that new week opening gap here. We're inside it now. We are inside that new week opening gap. Look at that. All right, so let's see if we have we have a nice opening range gap here. See, market closed here, opening range gap low. So at 634, we opened 774, another over 120 points there. So I'm going to put the date on it in case we can't close it. Lock that in. Get the opening right there. Lock that in. Then let's measure. Get midpoint of it. 704.25. $704.25. Lock that in. And there's the 0.25 again. So we'll see if we come back down. How are y'all liking this volatility? Man, talk about volatility lately. A lot of people are saying this is the Trump volatility coming back. I don't know if y'all were watching yesterday afternoon. I just had my charts up. And he started talking about tariffs. Oh my gosh, that market was going nuts. So this could be a stop run. All right, let's go to the daily chart here real quick. Here's that opening gap, that new week opening gap there. Here's the midpoint of it. We could be leaving a volume imbalance right here if we close up today. We're still inside last week's range because here's the high. Here's the low. I have them marked out. So let's drop to the 15-minute here. The 15-minute, I had this as a buy-side liquidity. We had relatively equal highs here. We just ran those. And then I have a sell-side liquidity down in this area right here below the midnight opening price. So about the 700s, roughly. And then we have this new day opening gap here, which is very large. So I want to see if we're going to try to reach up and fill this completely. We may or may not today. I'm not sure. But we're sweeping right now. So if we do end up this becoming a sweep here, then I'd be looking for this to run into the low 700s, high 600s with potential run to mid 600s down here. So we'll see. Let me go to this opening range gap here and see. Yeah, we haven't closed this huge one yet. Not quite. We're getting there, but we haven't quite closed this one. So I'm still going to leave it there. Let's see what else. That's about it really for right now. If I go to the 5 minute, see we took these highs. We have yesterday's high here. There's a bit of sell side liquidity under here, but I like this area where this 15-minute fair value gap is as well. So we're looking at this 15-minute fair value gap here also. So you gotta watch out though. We have that 10 or what was that? 9:45 news. Yeah, see, that's a stop run. 9:31. We're inverting the first presented fair value gap here. We inverted it basically. We did. We may get a new one here. So we'll see. I mean, there's some volatility for you, that's for sure. Holy moly. Flying up and down. But yeah, nice stop run here, sweeping buy side liquidity into that new week opening gap. Jeez, look at this. Oh, there's my news. I was like, where'd my news go? There it is. Hiding over here. All right, so let's just wait and be patient today. You definitely don't want to get caught off sides in this market right now. You want to make sure. I do like a rundown here, though. We have that news coming up, and I don't want to be caught early. See, we have this fair value gap here. I'm not going short right now because I don't want to. I mean, this could go send it through sell side because we did sweep buy side, but this volatility right now. Let's see, 92. I mean, it's not that bad. It looks worse than what it is. But I want to wait because also the reason why I want to wait is because we still have the midpoint right here of this new week opening gap that we didn't quite reach. And then we have the high of it there. So we didn't quite reach this high. So I kind of want to let the market shape out a little bit. Let it frame itself out a little more. Because normally, yes, I'd like to get short in here. But we're early. And we got so close to the midpoint of that new week opening gap. I'm not sure if we're ready to run down yet. We could, though. I mean, this would be normally a good looking short for me. Because I have reasons. I have sell side liquidity down here. Got that news in 6 minutes. And today, and with this volatility, I mean, you can get knocked out of trades pretty easy. Was anybody trading yesterday afternoon during that crazy volatility? It was like between, I think after 3 p.m., around 4 p.m. actually. It's like 3:30 to 4 p.m. I saw it going crazy. Yeah, Shadow's missing. Where is Shadow? We'll see. And, you know, I've had a good week, a really good week, actually. So my golden rule, y'all know my golden rule. Y'all should know it by now. Don't do nothing dumb on Fridays. Don't do anything dumb on Fridays. Man. Could be dumb on any other day, not Friday. No, let's not do anything dumb. Binge. What's up, Binge? Yeah, good to be back. Good to see you. Yeah, see how it's kind of accumulating in here? Good morning, Binge. we're kind of accumulating. Look at this. I mean, it's rebalancing this. That's why I didn't want to see, and time delivery really is a thing though. Whether you believe in algorithm or not, time delivery is very essential. Now if we invert this, because I like I said, I like longs a little bit more because we made it into the 800s like I thought we'd get to eventually, but we still have some nice room to go all the way up to 900 actually. So look how it went right down into this fair value gap. I didn't even notice this one here. This fair value gap, little bitty with this inversion here. We have inverted this one. We may get a little fair value gap here. Yeah, see, I think we're going to go up, all the way up into those, maybe even to 900. I just don't see a reason why I'd get this close and stop. Like 4 or 5 points away. So we're going to get this fair value gap right here, which is overlapping the inversion. I'm going to wait. We have news in 3 minutes. Volume imbalance right here. The significance of an inverted fair value gap is it'll basically use it just like a fair value gap, but like just like this. If price went through the fair value gap with relative ease, then when it closes on the other side, it basically inverts it and just uses it the same way you would as a fair value gap, but the opposite direction. But not all inversions are significant. And just like not all fair value gaps are significant. Yeah, that was an immediate, well, it wasn't an immediate rebalance, but it's look how it's to the tick hitting the middle of the inversion right now. But let's see if it holds. I mean, right now, yeah, it's just like creating fair value gaps, inverting them, creating them, inverting them right now. So for me, I'm sitting on the sidelines. No, an immediate rebalance is when it doesn't create it. So like if it's gapping and then the next bar, instead of creating the gap, it comes back and does not create the gap, that's a rebalance. That's an immediate rebalance. So this is an immediate inversion, not an immediate rebalance. Now, rebalance is when it doesn't happen. An immediate rebalance. Tyler, it could be high resistance. I'm not ready to call it high resistance just yet because we have news. So that's probably just what it's waiting for. Smarter than ICT himself. I don't know about that one. Yeah, he needs to go ahead and jump in the stream. Spam my link. That's a good question. Binge asked, for someone starting out, do you recommend ICT or Apex Sniper? That's a good question. That's a really good question. I feel like because I started with Apex Sniper, then went to ICT. I think the benefit of starting at Apex Sniper and then going to ICT was Apex is more structured, right? So it's like progressive. So it teaches you all the things that like you don't want to do in trading, when not to get a trade, stuff like that. And then it's like a progression, right? I like that. It's more organized because if a new person just jumps into ICT, they can be confused and kind of all over the place, in my opinion, just because it takes a lot of effort and a lot of people just getting started won't go through all that. It's kind of hard to say, to be honest. Yeah, Sniper's a great system. It's a great system. Um, Man, I don't know. That's a really good question. I don't know what I would recommend for somebody brand new starting out. Yeah, that's the one thing. Sniper system starting out, their basic setups and all that, the risk reward is negative. So like NQ, you'll go for 9 ticks profit and have a 21 ticks stop loss. So you got to be mentally ready for that. And it's a scalping system, right? So it is completely two different systems. But when you know both of them, there's a lot of things that kind of line up. Yeah, binge. That is the thing. There's a lot of info on ICT, and you can get confused. My recommendation, to be honest, if you're going to study ICT, just stick with the 2022 model, and then go on to his 2016 core content month floor, and you can learn each individual PD array, like what's an order block, what's fair value gap. Just go through that, and then study the 2022. Don't look at anything else if you're going to go ICT. 100%, Chris. If I went back to Sniper right now, I know I'd be like way more. Our whole problem, Chris, and my problem, like we had success with Sniper, but we were just not disciplined at the time. And then we started getting disciplined at the same time we found ICT, basically. So yeah, 100%. If we went back to Apex, we'd be fine there too. So you see how it did build up support here in this inversion? This is likely to go up. So we built up support here inside this inversion, inside that first presented fair value gap. I for sure would expect price to move up. What you can do is you can measure out now some deviations up here. But I would have, we have the middle of this opening range gap. Like I don't think we come back down, but could be wrong. You could look for an entry to go long and hit the midpoint of this new week opening gap or any of these deviations I just plotted, or the high, these highs of the new week opening gap and all. Like we may get a fair value gap here. I like that we built this support inside this inversion and inside all this mess. I'm just going to wait because I've had a really good week. So I'm not going to risk it by going long here in kind of a premium of the morning. So like right here's a fair value gap. I believe we are going to go long. This would not be a bad long if we come back into here. Stop going below this low. It shouldn't come back below that. I'm going to wait like right here. In my opinion, this would not be a bad long right there. It's not my model. I'm trying to stick to what's working for me. So I'm going to wait until price does see if it comes up and sweeps in this area, and then I get a clear signal to go short. Because I'm basically sticking to my reversals. No, I don't have a video on just that fib setting. So basically, like all it is I mark out, you have the quadrants, the minus 0.5 and 0.75. Where is it? I mean, this is my settings here. And this will mark out deviations like the minus 0.25, minus 0.5. If you want to screenshot that or come back to the video and screenshot it. And basically this will plot the 70% range, like on a pullback, the half point, and then deviations going forward. And $200 a month to use it. Yeah, $200 a month on Apex. I mean, the benefit is you do get it for 30 days for free. So you can get a pretty good amount in, but yeah, it is like you definitely want to be profitable or either make sure you budget in an amount. Yeah, I mean, it is a good idea to do month 4 first of the 2016 core content before you go into 2022, because that way you at least know like the vocabulary, the verb. And that's a video I was doing before of like every like the what is a fair value gap, what is an order block, not necessarily explain how to use them, but just the terminology. Like for people getting started in ICT, there's some basic terminology that you need to know. Because if you just jump it right into some of his videos, he'll say things and you're like, what's that? What's that? What's that? And you have to go searching for him. Yeah, see how we came back into this fair value gap, into this area. And we may, I mean, I think we're going to go long, but this is not like a good entry model for me, to be honest. I don't like the setups, or for me, I just don't like this. It's not my entry model. Yeah, there it goes. Look at that. Like I said, this would be a good long, but hey, Tyler, good job. Passed a 50K eval. Let's go. But see, now that we're sweeping this midpoint of the new week opening gap, I feel better. We could just continue up today, which that's a high probability, in my opinion. But now I'm waiting to see if we get a market structure shift in a short after we sweep some area up here, probably at 10 o'clock hour. Because that's just not my entry model, right? So, but like I said, if you'd have taken this, you'd be in some nice profit. Get in here or here and have, as long as your stop was below this swing low right here, you're good. Wherever you got in, 807, 822. So, but it may be sweeping. This is what I'm looking for now. Where's it going to reach to? Actually, let me jump up to a 1 hour chart here. Yeah, we're likely just to fill it all the way up. Check the 4 hour. The 4 hour high is the same as a London high. Yeah, we'll see. It's a probability of me not getting a trade today. There we go. It's ripping up. Look at it go. And I don't worry about. Whoa. Hold on a second. That's weird. Look at this gap. That wasn't like that a minute ago. Must be getting some kind of lag or something. Yeah, I'm just going to let it go, let it run, because that's not my entry. The key is knowing like how to read price and have an idea of where it should go. If it just runs, I'm not going to get a trade. Yeah, your chart doesn't show, and I don't know how to refresh this chart on Ninja Trader. I don't know if, I mean, Trading View. I don't know if there's a way to refresh it, because that wasn't like that a minute ago. Reset chart view. I'm scared to hit that. I don't know if what that'll do. Does anybody know if there's a way to like refresh Trading View chart? Chris, F5. Okay. Oh, nice. Okay, hold on. Let me save first. There we go. Thank you, Chris. So we're bouncing on that 0.25 now. Yeah. All right. So first sign of a market structure shift is an inversion, right? So we just got this inversion. We may get a fair value gap there. But it's not a market structure shift yet until it takes a swing. But this is just a signal that maybe it's reached up high enough for the moment. We have 2.5 minutes and we'll get a 15-minute fair value gap down here. And then we very well could reach down to the 15-minute fair value gap. That would be what I'd be looking for target-wise if I end up getting a short. But I'm comfortable going short now because we swept the high of this, or swept the middle of this, the new week opening gap, which, like I said, I didn't quite, and we bouncing off the 0.25. I didn't quite understand why we wouldn't go here to the middle of the new week opening gap and just stop that close right there. Like, that didn't make sense to me. So just remember, you're always looking for reasons why things happen. We have another fair value gap here. See if we invert or not. It's using it, and then we have this volume imbalance here. So I want to see this stuff get taken first. So if it does come back up into this inversion, I want to see it hold, like create some resistance in here. If we're going to go ahead and start working our way back. I mean, it's not really like a high probability at this point that it will continue down, because there's still lots of reasons why we could see it continue up. There we go. Now, if we can make a higher high and then end up coming back low, we'll have a breaker here to the downside if that happens. Do I recommend a market order for a single trading account? If I was only trading one account, I probably would do limit orders. I just mainly do market orders because I have so many accounts and so many contracts across all of them. But if you're going to go like a limit order, you can set it up here, you know, kind of manage it a little easier. All right, let me get rid of that. All right, we got 10 a.m. now. Yeah, see, we're just keep on pushing higher. We inverted this little one, but did nothing. Reclaimed it. Yeah, we're at this point, we're just gonna go all the way up and to 9. My guess would be we're just gonna go all the way up to the high of this new week opening gap at 909. Because we're just pushing so hard and so fast up there. I wouldn't risk going short yet until we get that. The draw is going to be too strong up there, I believe. See, it's hesitating a little bit at the 0.5, but again, just like down here, we're too close now to the high of this opening range gap and the high of this new week opening gap. We're too close to not get up there. So like this could be an order block here. With fair value gap overlapping. So right here on the 0.25 could be an entry if it doesn't get up here first. But see, and that's the thing, like for me, since I'm focusing on reversals mainly right now, you just gotta stay disciplined, right? You gotta sometimes watch price run away and just wait. Just wait. Nice, Binge. Good job. Yeah, this is a good long right here. I mean, this was a really good long. I called it out. It worked. It's running up there. Let's take a quick look and see what's above this. There we go, 900s. I mean, it's so nice though, like being able to look and know where price should go, right? Like that's a good feeling. And then you just have to figure out a way to trade it, right? That's all you got to really do. Get this 15-minute fair value gap. We'll see if we get this one here or not. I'm going to take off the deviations because we had really good targets up here. Let me go back to the 1 hour, see what else we have up here. I mean, we have nice buy side liquidity up here at 0.77. If it keeps going. I mean, this is that area I was saying right here. Also, lots of buy side liquidity up here. Yeah, at about 0.77. We may hit that 22,100 if we just keep going. Oh, Chris, you're watching me in 480p? Come on, man. One thing, Binge, that I really like with ICT concepts, and that, for one, for me, I'm able to read it better. Like for me, I haven't been able to really, like, I've been able to read the market, but not anywhere near as good as I have with ICT concepts. That's one thing. But another thing is, one thing that stuck with me is him saying one time that As long as you know where price should be going, you don't have to be perfect. And that stuck with me because when you're trading Apex, you got to get in at the right time, the right entries. Like you can't miss an entry. If you miss an entry, you got to let the trade go, right? And it's not just missing entries. Like you got to get filled at the right place. But one thing, that's what I said. What I'm saying is he mentions not being perfect. Like you don't have to, because if you know where price is going, you don't have to get in at this spot. I have to get in at this spot. Like exact, you can wait. Oh, it's just like here. Oh, it's building support in this inversion. Let me wait. Okay, it's coming up because I know price should come all the way up here. So I can technically get in anywhere if you know where price is going, but you just have to know how to manage your risk and know where your stop should be. Because obviously the longer you wait, the you still have to have your stop in the right place, or else you risk getting stopped out and losing on a potential winner. But if you know where price is going, you just let the market get there and you give it the room. You give it the room and just have to be patient and let it work its way out and get there. That's what I really like. Yeah, it's and we're human, right? So we're all human. We can try to be as perfect as we want all the time, like as much as possible, but we're bound to make a mistake at some point. So all right, in this area, I really, if price starts like just keeps shooting up, I'm likely to not get a trade. But we have we have these new day opening gaps up here. We still have that area up there. If we just keep going up, I'm not going to take a trade today. So I am looking in this area now to see if we can get a market structure shift in a short somewhere. And that's where I'm looking for low hanging fruit, especially. Like I would just look to take it down to a PDRA or somewhere. And if we measure out, like let's say for example, price stops there, measure out that high, measure out this low, and then my range fib. Let me pop open the settings. It's simple. It's just a 0, 0.25, a 0.5 for the midpoint, and a 0.75. And then of course the one is this is the high and the low. So then I would look for the midpoint here. I would just look to take profit at the midpoint or the first PD array after the midpoint, which there's a PD array, which this fair value gap overlapping it. So that'd be the first one. That'd be the low hanging fruit. So if I was able to get a short somewhere, I'll just take it right back down to here, call it a day. Thanks, Binge. That's always good to hear that it's helping. So I'll leave this here, and then we inverted this little one. I wouldn't consider that much of anything. There's still 6.5 minutes to close a potential fair value gap that may be happening on the 15-minute. Let's see. We're getting this inversion here as well. Let's see if we get that 15 seconds. And let's see if we get a fair value gap here or if we get an immediate rebalance. That's going to be... I do like that we did take our, ran up here and took that high there. We didn't quite invert this one. Then remember, this could be an order block here. These two down candles could be a bullish order block, so we'll see. You'd want to watch the opening right here of this bar and then the midpoint of those, which would be right here, midpoint and the opening. Let's see if it gets an immediate rebalance or if we get a fair value gap here. See, on the 15-minute, this is the... Oh, wait. Oh, that's 5-minute. 15-minute, this is the fair value gap we may be getting in 5 minutes. So we'll see if we rebalance this or if we get the fair value gap. So I'm kind of looking at. All right, we got this fair value gap. We don't technically have a market structure shift yet. So especially right now, I want to be very cautious going short. See, if we get, this is why I want to be cautious going short. So I would like to see this bar that we're on now, this candle, I would like to see it not close above the high of this fair value gap. I'd like to see it close under. And then what I like to see it do is take this swing low, come back to this area, and then go short from there. But it's not looking like it wants to really do that. Yeah, inverted that one. Let me get rid of this one. Inverted this fair value gap. So at the moment, what if I am going to go short, what I would like to do is see it come up, take this high, and then go ahead and displace down through this low with a fair value gap. And if that happens, then what we would have is a breaker to the short side and then displacement with a fair value gap to the short side. I would like to see that if I'm going to take a short. Otherwise, it'll just probably keep on creeping up, and then I won't take anything today. I think I'm 3-0 for this week. 2-0 or 3-0 on wins. And yeah. Again, golden rule, don't do nothing dumb on Friday. There we go. Taking that high. Now what I would like to see it do is close up here, create this fair value gap, invert it, displace through this low with a fair value gap to the short side. If I'm going to go short. Otherwise, nah. Otherwise, I don't like it. Because if that doesn't happen, then I think we'll just continue up. And be one of those days that we just run up. Well, we did get this fair value gap there. So I'm going to watch that one. Now, if we don't get one here, then this is the one I want to get inverted. Because now we have a high, low, higher, high. And if we make a low, then basically this swing high and this low. Yeah, we didn't get a fair value gap. So I want to see this one get inverted. And then, oops. If this one gets inverted and we take these lows, then we're going to have a breaker here. I'm gonna speak this into existence and mark it as an inversion. YM is still very weak. Let's take a look. What's ES and YM doing? ES made a higher high there. Okay, cool. Kind of similar to NQ. YM, oh yeah. YM is not correlated hardly at all with the other two. YM's like I don't know. YM's funny sometimes. It does its own thing often. All right, so if we take this low right here, we're going to have a breaker. We're going to have an inversion. And then I want to see displacement leaving a new fair value gap. Now, like I said, if that happens, I'm not looking to trade it like all the way down anywhere. We're about to get this 15-minute fair value gap right here as well in the next 45 seconds. So I would only take it right here to this equilibrium, about this 830 area. Not a huge trade. Got a little fair value gap potentially in the next 30 seconds. Right there, if we get it. And then these three up candles would be an order block, a bearish order block. Yeah, we didn't get this. Let's get rid of that. That's all only if we take this low and displace with a fair value gap down. Otherwise, it's going to keep going. And yeah, so we got that 15-minute fair value gap now too. right here. So we could see price come back into this a little bit, but now I'm kind of like, we could see it come back down in this area and continue up. Not loving it. Although that may be a potential if you believe price will continue up in this area, would be a potential area to look for it to go, pull back into and then go long. But not really loving it now. Let's see. What's today? The 31st. What's this week? 27th through 31st. Yeah, so 2-0 this week. 2 wins, no losses. I'm fine with closing out the month. Closing out the month with 2 wins on the last week. That's fine by me. So this one did not get inverted yet. It's holding up. You see, it's building some support here. We'll see. This is technically not a breaker yet because we haven't taken these lows. This is me just like looking forward. So that's what you got to do too. Like always try to kind of anticipate and look forward. That way you know what you're looking for. And if it happens, great. If it doesn't, then you don't have to, there's nothing. And so like between this swing low here and this swing high here, I don't really care what price does in between them. To be honest, like all this little stuff here, I don't care what it does. I want to see the displacement up or down. If it displaces up through this high, then I'm done. If it displaces through this low, then we may get something. That's possible, yeah. Benton. Yeah, we're just filling that entire gap. See, there's that volume imbalance. We're poking through. We'll see what we do here. Actually, Binge, I have a little bit of a losing month this month. I had a rough January to start. And then I had 2 days where I broke my rules, unfortunately. That's where the human part comes out. So my rule is 1 trade, and both of those days I took an extra trade. I don't know why, but that's why I went down and dropped my contracts even more this week for this week. The amount of contracts, because like that's what I do. That's like my rule for myself. if I do something stupid or whatever, if I'm on a losing streak, I got to reduce my contract sizing until I can figure out, is it here in my mind or is it the market? Last week, and actually this month, uh, let me pull this up right quick because this month was all me. Let me see. There was 1, 2, 3, 4 days that I broke my rules. One day was an afternoon trade. I don't know why. I don't trade afternoons. I suck at afternoons. And what was happening too, you always step back and try to figure out what's going on. What was happening too is I was mixing in like the 2024 model, 2025, and I was trying to pack on things. And I was telling myself, hey, I'm going to be really patient this year. And I know y'all have heard me say that. Really patient because, I want to take great trades. And I think what was happening is I was only getting like one trade every 3 or 4 days. So whenever I'd hop off the stream, there was like 3 days that in the afternoon I took a trade because I didn't get nothing in the morning. That's not good because I don't trade the afternoons. I don't trade the afternoons. I'm not good at it. I just don't. So that was one day, traded the afternoon. Another day, traded past 11 a.m. Actually, all the days were like that. All 4 days. And then on 2 of those days, I took an extra trade. So yeah, this month was not like, and that's why I've had all my PA accounts, the same PA accounts for, I stacked them on throughout last year, but my oldest one, I was watching this to see if we were going to displace down, by the way, which we did not. So don't worry. I was watching just in case. Well, let me see here. Let me get this. Hold on. Oh, come on. All right. One second. Trying to figure out. Yeah, I don't think I'm gonna get anything, y'all. Let's try and get this screenshot. Yeah, next month will be fine. I'll be good next month because I go back and I try to figure things out all the time. So let me just pull this up here because what's going on? Okay. No. Trying to open this, pull over the screenshot, but it keeps disappearing on me. Interesting. Yeah, I use Forex Factory to check news. I don't know. I'm having trouble over here with what I'm trying to do. Okay, here we go. Think I got it. All that just to pull over this screenshot. Anyways, so yeah. Here's my PAs, and I like to show the PA number because they're all the same. Like if you look at anytime I've shown my PAs, anytime last year, since March or April, no, somewhere in there, is when I had. So you see 116 trading days. These are trading days. I don't take a trade every day. took the last 2 weeks of December. So I just want to show like that's how I maintain my accounts. When something's off, when I get on a losing streak, when I start breaking my own rules, I size down. I mean, yeah, there's times you can like get new PAs and all that, and sometimes it makes sense, but you know, but that's how I maintain them, because I size down until I figure out what's going on with me or the market or what. And then after I get a couple trades, start feeling like, okay, I got it, I'm good. Then I, size back up to my normal sizing. But that's what I do, is I'm always constantly moving my contract sizing there. But yeah, I don't like this price action anymore either. I mean, this was probably the trade of the day. Was down here in this inversion, this 1 minute fair value gap, first presented fair value gap. This is trade of the day to take it all the way up to this new week opening gap high. So we'll see. Yeah, TJ, that's the new week opening gap I was referring to. Now it's just like, all right, market did its job. It doesn't know what to do now. What's the difference between rhythmic and trade evade accounts? It's just, I mean, it's personal preference, really, I guess. Rhythmic, they both have their pros and cons, I guess. I like Rhythmic's dashboard because it's easy for me to go in and open up Rhythmic's dashboard, see my accounts, and that's kind of like that spreadsheet that I built out, the Google sheet. I was kind of based off Rhythmic, the way that they are, where I could just copy and paste stuff. So that's kind of why I have Rhythmic. And then also, I just always had Rhythmic from the beginning, so I just never changed. The benefit of Trade Evade is you can, within NinjaTrader, you can connect to as many Trade Evade accounts as you want, like from anywhere. Rhythmic, you can only connect to one Rhythmic connection. So that's, I guess, the downfall. Yeah, Trade Evade, you can log in straight to through TradingView as well. So because I have a live personal account, that's the one I connect through Trade Evade, because I have it through NinjaTrader, and then I copy it to the rest of mine in NinjaTrader. Yeah, Jeremy, you'd have to get Trade Evade if you want to do that. If you want to use TradingView, you either need a Trade Evade PA eval, or like you have to have something Trade Evade or a live account through NinjaTrader. Like one of those three. Yep, 80% off right now until February 5th. This will be my first prop firm, so it seems a bit confusing, but I'm sure. Yeah, it can be confusing at first, because I remember when I first heard about prop firms, like I was like, what is that? They're going to give me money? Do I have to pay it back? What happens if I lose it? Like, I had so many questions. I would just, go to whoever you're going to use, go to the FAQ and make sure, you kind of read up on it. So I have a couple videos on prop firms, but not, it's like more of like the overall concept, not, diving into one specifically, I guess. I did make a video on the Apex 3.0 when that came out to kind of go over their rules and stuff, but that's, to me, the biggest word of advice that you can give is what Chris just said. If you just use the prop firm like you would your own personal account, that's the best way to go. treat it like it's your own personal account. If you have a 50K account, your trailing drawdown is $2,500, meaning you can't lose more than $2,500, right? So even though you have a 50K account, you can't think like I have 50K. You have to look at it as I have $2,500. So if you look at any of my money management discipline or my discipline like money management videos, that's how I look at it. Okay, hold on. Let me get this here real quick. So I'm adding on to my Google Sheet, and I'm kind of building on this other, like I'm building a super sheet where it's going to have a discipline tracker, money man. I wasn't going to bring this up yet, but it's going to have a discipline tracker, money management planner, risk, and then also what I want to show is this risk calculator. Like this is in it here. So like, this is how I look at it. How many days do I have to lose in a row, or how many trades until it's blown? So like, if you have a 50K account and your threshold is 47,500, you have a $2,500 drawdown, right? So you could put in here, if you're going to trade a micro, that's 50 cents a tick, 2 contracts, and then you put in your loss limit and how much you want to risk. Tick, basically how many ticks you're willing to risk. So if I'm willing to risk 150 ticks a day, or let's just say 100 ticks for easy math, that's telling you you're going to be risking $100 a day. And if you keep this plan and only risk $100 a day or $100 per trade, that means you either have 25 days in a row that you have to lose before you blow it out, or 25 trades in a row you have to lose to blow it out. That's how I look at it. I want to know how many, but I do it per day because I want to know how many days in a row do I have until I blow that account, because I know my trading history and I don't lose historically a certain amount of days in a row, right? Because you'll have even if you have a bad streak, it's like a loss, win, right? It goes back and forth. So if you follow this, like you're not going to blow accounts. And then you can even say, okay, well, 25, that's a lot. Maybe I could be a little more aggressive. Let's go 3 contracts. Okay, now 17 days. That's cool because that's still a lot. Like who loses 17 days in a row? Just the probabilities like of losing 17 days in a row, even if you just click buy or sell blindly, like that's gonna be hard. So that's how I keep my accounts for so long. So I really, and then so this is in there, the risk calculator, but that's how I look at things. If you look at my money management videos, I talk about that in more detail. It's not ready yet. It's not ready. Like I have a lot to do with that. A lot further to go. Because like I'm going to have like the discipline tracker, money management planner, risk calculator. So like I'm trying to build a super sheet. So that way nobody needs to pay for anything online if you don't want to. Like online journals or anything. It's going to be everything you need. And I will share, y'all. I will share. It's nothing fancy. It's just, it takes the time and effort to do. That's all. All right. So y'all look, we took this swing high here. We left this fair value gap right there. I'm not taking a trade today. I'm done. I don't think we're coming back down. We're likely just to keep creeping up here. And if we do, maybe in the afternoon, we might see a shift, but I don't like the price action anyways. So, hey, I had a good week. I'm not willing to give it back. I want to go into the weekend with that mental capital of like, hey, I had a good week. I had 2 good winning days. They were great. Go into the weekend, refreshing. If you get any time, review. Look, here we go. We're just going to keep going up. Review, study, and man, that's all it is. The long game. Play the long game with trading. Don't try to get rich overnight. Base hits every day. So, Chris, the futures guy. But Binge, if you just look up Chris, the futures guy, you'll find him. He's on Facebook. He does not have a YouTube, but he has a Discord. Chris does have a Discord with a lot of people in it. Chris, you can always share your stuff, my friend, in my chat. You found him? Cool. So yeah. Yeah, that's gonna be it. Yeah, phone number, social security number. Like, come on, Chris. Why you being why you being like that? Yeah, he does have a YouTube. He just hasn't done anything in a while. All right, y'all. 10:35. I'm calling it. I'm calling it. I'm good. This is likely to keep. If I was gonna keep trading, here's some to leave y'all with these basically levels here. Um, we had right here. This is where I'd be looking at since we took this new week opening gap high. We're at the -1 deviation now. And right here, the price when it has these days where it just kind of keeps going, it's very likely to go to the -1.5. So being these new day opening gaps are right up above it, I mean, that's kind of where I'd be looking for price to head now, between 970 and 985. That'd be kind of this is not a breaker, so I'm gonna get rid of that. It's not a breaker. None of that happened. This fair value gap built up that support here. And then yeah. I'll be looking at this area. I don't think today we'll make it up here, but I'm gonna remain bullish likely into next week. Let's take a quick peek real quick into next week's news. Next week's news, Monday, ISM. Then we have JOLTS. Got a lot of news. Is it NFP? Oh, we got an NFP. Fed members. Yeah, we got a lot of news. So I think next week we see it reach up there. But we'll see. That can always change. Go to the daily chart. Yeah. I'm pretty much going to be bullish to go up there. Right up to around 21,000. Close to 21,000. So, yes. I definitely appreciate it. Like the stream. I'm going to head off of here. So, I think Chris. Oh, and by the way, I got my website working yesterday. In case y'all didn't see, it was something dumb that I did on myself. So just go to it's the main site is still under construction, but if you go to the connect, there, then you'll see all my like where you can, where I'm at, where you can follow me, all that good stuff. And then if you do go to the main site though, you can enter your email if you want to be notified when everything's out or anything comes out. So just throw your email in there, and I don't spam it. So all right, y'all, I'm gonna head out. So if you're going to trade the rest of the day, you know what to do. Don't be dumb on Friday. All right, y'all. Take care. And as always, trade well. See y'all later.